Oh my goodness, we just barely creeped into record territory again. Hey everybody, Courtney Smith here for our August 24th Wall Street winners, coming at you since 1995. And of course, this has been coming to us even longer than that. All right, we just barely got into new all-time highs on the broad market. Purple Predictor looks pretty good to me, but notice we just keep losing upward momentum. So we got into near the all-time highs, and then we kind of stalled out for almost 2 weeks and then barely made it on Friday. What about over on the Dow? The Dow didn't make. Look how far away it is from all-time highs. It's a long way away. And in the upper right-hand corner, you can see that buying pressure is going down, selling pressure is going up. Still positive, but weakening. NASDAQ, though, of course, it seems like it's just a relentless move higher. But now take a look at the price is moving higher. But look at that little green line underneath that. The price is making a new high, but the momentum, which is the green line, is not. So all three indices are looking, well, 2 out of the 3 made new all-time highs, but all 3 of them have weakening technicals. They're all running out of gas. And when a market runs out of gas, eventually it has to retrace. It could just retrace by a few percent, but it's got to retrace to build up some value and attract new buyers into the market. And we need to see that soon. Now, the problem, of course, is that I still think we're going to have a big bear move. I could be wrong, but I still think we have a very good chance that we're going to have a big bear move. Will this next dip be the beginning of that big bear move? Remember, too, well, let's go over here. Seasonality. So we're still staying neutral. Notice down at the bottom, the utilities got almost through that level that I told you to look at last week, but then we failed to do that. All right, the seasonality, we dip here, then we're supposed to rally. And remember, we're looking mainly at the green line. We're supposed to rally through the early part of September. Now, normally, it's in September that we start bear markets. So we could be just a few weeks away. And if the market's running out of gas, then we could see running out of gas triggering a short-term bear market, short-term bear move, I should say, which turns into a full-fledged bear market. We'll see. All right. Yield curve bouncing around. Not much going on here, though. Asset allocation, they're getting money out of the bond market, although this week not quite so much. Stock market risk indicator also stable. We had these big moves back in the asset allocation and the stock market risk indicator a week or so ago, but now not going anywhere at all. Global shares also selling off. They reached the highs 2 weeks ago, and now they're actually, we're making lower lows and lower highs, although they're micro highs and lows. Bonds creeping higher. I think what's happening is we're not seeing money go out of the stock market into the bond market, but I think the Fed's taking re-control of bond yields. Bond key factors all suggest that we should see higher yields, which would be lower prices on the bonds. We saw that over the last couple of weeks, but this week, no, we're rallying a little bit. But bond key factors all suggest higher interest rates, and in particular, higher interest rates starting in a month or two. Once again, could a stock market crash cause higher bond yields? No, probably not. The Fed will come in and hammer them lower. Dollar stabilizing, but at a very low rate. Notice, too, here that we made the low last week, but notice once again the little green line, the RSI did not make a lower low, showing a lack of downside momentum. So look for the dollar to rally a bit this week. Maybe, once again, not a major rally, but look for a rally this week as that downside momentum runs out of gas, giving a boost to the dollar. Gold is the opposite of the dollar, usually. So if the dollar starts to rally a bit, then that means gold's going to continue under pressure. Now, the problem is that the rally that we had 2 weeks ago didn't even come close to the old highs. So that was pretty weak. And here we are. We're down week on week. We're lower than we were a week ago. A break of that low down around 1875 would be pretty significant in my mind. And a break, of course, above the all-time highs would be pretty significant on the upside. One thing that is better this week is the purple predictor is showing that maybe some smart money is coming back into the gold market, that we needed to have this sell-off of $100 an ounce in order to build some value in the market and build some excitement here, and also, of course, to wash out the weak hands, all right? So, like me. But we'll come right back in. I have no problem rebuying right away. But right now, let's just stand aside. Gold key indicators, pretty much neutral at this point. So really no reason to be involved. Crude oil also very neutral, but there is a slight upward bias here. Last week we told you that we were much more interested about being on the long side. I said I wasn't going to buy it officially, but unofficially that would be that breakout that we saw is pretty strong and I think pretty important. Purple predictor is, I think, also helping out here as well. So I don't have a position in Bitcoin, but I'd be biased towards the long side at this point. So don't forget, of course, I still think we're getting a bear market, and we're probably within weeks of it starting to happen. September, October is right now my expected bear move. So send an email, come to the webinar that I did a few weeks ago. Okay, freebies. Get out there, go make a bunch of money. Fully paid up members, hang on just a second.